Coinbase posts soaring profit of over $1 billion from a year earlier loss. This has been helped by an uptick in cryptocurrency trading following the launch of the first US listed exchange traded fund tracking Bitcoin in January. Today's episode is sponsored by Cake Wallet, where you can send, receive, and even exchange your crypto right from within the wallet. Cake Wallet is open source and non-custodial, so you control your own private keys. Available today on iOS, macOS, Android, and Linux. And StealthEX, a privacy-centric crypto exchange which enables you to make crypto-to-crypto exchanges anonymously. Good evening, everybody, and another warm welcome again back to Enter Crypto with me, Chris Kenyon. Now, in today's video, we're going to be talking about Coinbase. They have just had a massive, reported profit of over $1 billion this quarter. And so, as always, guys, let's really jump straight into this Reuters article and see what we can learn, and then we'll comment after. So the company on Thursday reported a net income of $1.2 billion or $4.84 per share in the 3 months ending on March the 31st, compared with a loss of $79 million or 34 cents per share a year ago. Coinbase shares fell 2.5% in after-hours trading after ending the trading session up nearly 9%. Despite a very solid report, the stock traded lower after hours with concerns that trading volumes will decrease based on downward movement in Bitcoin, said Paul Marino, who is the chief revenue officer at investment firm Granite Shares. Crypto prices rocketed after the US's SEC approved the launch of a spate of crypto ETFs tied to the spot price of Bitcoin in January after a decade-long tussle with the industry. Coinbase is the custodian for several of the spot Bitcoin ETFs, including BlackRock's iShares Bitcoin Trust. And enthusiasm about the ETF sent Bitcoin to a new record high above $72,000 in March and renewed investors' enthusiasm in digital assets. Trading volumes at the Coinbase in the first quarter came in at $312 billion compared with $145 billion a year earlier. Keeping our cost structure low while continuing to innovate is really paying off, said CEO Brian Armstrong on a call with analysts. You know, Coinbase is really, I know people have had a lot of problems with them, but it's really, on the whole, turning out to be one of those kind of Google, Facebook, Tesla companies which started from nothing and has ended up being worth, hundreds of billions of dollars. And the reason for this is that it has it's kind of cornered the regulated market for crypto exchanges. There isn't really another crypto exchange that's fully regulated and that's as big as Coinbase, and that is public. So they're doing loads of deals with investors behind the scenes, like BlackRock, like State Street. There's all these ETFs that Bitcoin has to be bought from somewhere and it has to be held somewhere. And Coinbase have kind of come in and said, listen, hold all these hundreds of billions, if not soon to be trillions of dollars worth of Bitcoin and crypto, hold that with us. And so they're actually getting a huge amount of money on fees. I mean, can you imagine how much money they'll be making in fees? Because that's their business model at the end of the day. They make all their profits from fees from people buying and selling crypto. And they have Coinbase Pro as well, which is like, for actual traders, for those that don't want to buy the spot Bitcoin. You can, for example, leverage trade it or margin trade it. So they really have done well. And they're public now as well. It's a public company now. There are problems, though, with people having their accounts frozen, and we've had that in the past. We have had also in the past where people have complained about losing access and scammers, withdrawing money. That is very rare now. I haven't heard a story like that for a long time. But currently, they do freeze accounts if they're outside of, if they feel like it's, they might be violating regulations, or, say if you don't provide a tax number on your account, so they'll freeze your account, which is kind of like what banks do as well. They'll freeze your money on it, and then they kind of won't give you it back until you can prove that you got that money from a legitimate source. But if they can get that ironed out, because that's a trust issue, that's the problem with that, is it's more than it just being people not being able to access the money. Sometimes it's actually, you know, it can spread, especially with the internet and social media. If they start getting a name for themselves and not being trusted for the average guy, then people aren't going to trust them, and then you're not going to put your money, and you're certainly not going to put your crypto with a company that you don't trust. Having said that, I've never had a problem with them personally. I do think that the fees are very expensive. You can buy crypto cheaper elsewhere. But if you don't mind paying more for the fees and you really want to buy that crypto, you really want to sell that crypto on that day, you know, they facilitate that, and they make it very easy to do it, although albeit a little bit expensive. And whilst I cannot see into the future, as can nobody, I really do feel and think that Coinbase could be a future, you know, a massive, massive company. If crypto takes off, you know, like we all think it will, it's just inevitable that Coinbase, providing it does all the right things and, you know, goes up with crypto, because we're all going to need to keep buying crypto. We're all going to need to keep trading it. And as are the companies, it's just growing. We're getting more and more ETFs. We've now got a Hong Kong ETF for Bitcoin and for ETH. We've got all the, you know, the BlackRock ETFs and all the others in the US. So it's going to be shortly before we get Canada, the UK, Europe. There's going to be all this, you know, wall of money moving into crypto, and they're going to have to go through a medium. And I think that medium, because it's so heavily regulated, will be Coinbase. So another interesting article there, guys. As always, thank you for watching. Thank you for listening. Don't forget to like, subscribe, and click on that notifications bell so that you don't miss out on any future updates. And I'll see you all tomorrow evening. Take care.